Hey everyone! With BlockSonic, you get the top Bitcoin news of the day in a practical narrated format, so you never miss an important market move. With BlockSonic, you don't need to search for information. We find it for you. Today, the news dives deep into the choppy waters of the cryptocurrency world. Our top story: Bitcoin faces potential plunge. What's behind the slide? As Bitcoin teeters on the edge of a possible downturn, we'll explore the invisible forces at play, from macroeconomic pressures to geopolitical tensions. I'll discover how market makers are navigating a complex landscape, their strategies to hedge against volatile swings, and why a potential drop to $58,000 might be on the horizon. We'll also examine the broader impact on altcoins and the role of global trade tensions. Plus, stay tuned for insights into Bitcoin's artistic resurgence and a lightning-fast trading triumph. Join us as we unravel the epic forces shaping crypto prices in 2026. Let's get started. Invisible forces. Crypto's heartbeat amid tariff turmoil. Cryptocurrencies react as Bitcoin faces new challenges. As we look towards the unfolding events of January 20th, 2026, we witness the crypto realm bracing for fresh ripples. The scene is set. Bitcoin, standing at $91,161.69, alongside other dominant digital currencies, is experiencing a downward trend. This mirrors the trajectory of the Nasdaq 100 futures, influenced by the tariff threats from President Donald Trump against European nations, opposing his Greenland takeover ambitions, escalating geopolitical tensions. Beneath the surface lies a hidden dynamic that shapes the seamless trading experience. This is orchestrated by market makers, the unseen entities, crafting buy and sell orders within an exchange's order book, ensuring large trades occur at stable prices. Market makers within Bitcoin's options market are compelled to trade in harmony with the market flow. They buy Bitcoin as its value ascends and sell as it descends, maintaining a neutral stance against price volatility. Their profit emerges from the bid-ask spread, achievable only when they consistently hedge against these fluctuations. This intricate dance is known as gamma exposure hedging, wherein market makers manage their exposure as Bitcoin's price shifts. Presently, they predominantly face negative gamma exposure within the $86,000 to $95,000 range, as per Deribit data monitored by Amber Data. Negative gamma implies heightened risk as prices fluctuate, prompting market makers to buy during strength and sell during weakness, intensifying price movements. A similar negative gamma occurrence was observed in the S&P 500 options last October. Amidst this complexity, attention remains riveted on geopolitical undercurrents and the looming Supreme Court verdict on Trump's tariff strategies. Political turbulence, fueled by Trump's early 2026 military intervention headlines in Venezuela, tariff threats towards Europe and Iran, and renewed initiatives to replace Fed Chair Powell, is accentuating the tension. Observes Emir Ibrahim, an analyst at ZeroCap, a digital asset trading firm. A Supreme Court ruling unfavorable to Trump could induce short-term volatility in trade policies, impacting refund liabilities and deficit forecasts, according to Ibrahim. In traditional financial arenas, the United States 10-year yield has surged to a 4-month apex of 4.37%, alongside a weakening dollar and declining stock futures, signaling widespread fragility in United States assets. Stay vigilant. We at BlockSonic understand that these invisible forces exert a profound influence on crypto assets, shaping the landscape in subtle yet powerful ways. How do you perceive the impact of these market dynamics on your crypto journey? Share your insights and join the conversation in the chat. Bitcoin's potential downslide. Macro forces set the stage. Could Bitcoin face a tumble to $58,000? Macro forces hold the key. We have witnessed a compelling scenario brewing in the digital currency realm. As noted, market analysts suggest an imminent slide for Bitcoin. With influential market dynamics, including potential tariff escalations between the United States and the European Union, and broader geopolitical tensions, Bitcoin's trajectory appears poised for a shift. This aligns with veteran trader Peter Brandt's prediction, pointing to a possible decline to a range between $58,000 and $62,000. Peter Brandt, a seasoned futures trader since 1975 with a substantial following on the social platform X, recently shared his perspective. On Monday, he indicated that Bitcoin, currently valued at $91,161.69, might experience a downturn within the next 2 weeks. His analysis highlights resistance levels around $102,300, maintaining that the cryptocurrency is in a bearish pattern. Brandt confidently stated, $58,000 to $62,000 is the direction I foresee for Bitcoin. If this does not materialize, it does not concern me to be incorrect. Jason Fernandez, a market analyst and co-founder of Adlunum, reinforced Brandt's projection, but underscored that macroeconomic conditions wield greater influence than chart analyses. He noted while Brandt's target is technically feasible, it's the macro landscape that dictates the shift. Fernandez identified several contributing elements to the potential decline. Despite United States inflation falling below 2%, central banks maintain caution, keeping monetary policy stringent. Any tariff escalations or geopolitical tensions risk rekindling inflation, delaying rate cuts. Additionally, tensions between the United States and Europe concerning Greenland could escalate, prompting a defensive economic stance. As long as interest rates remain stringent and liquidity limited, Bitcoin's return to the mid-$50,000 range remains a possibility, Fernandez added. Mati Greenspan, founder of Quantum Economics, echoes Brandt's viewpoint. Brandt's assertion of a 50-50 chance for such a price drop holds weight. While technical setups are significant, the prolonged period of Federal Reserve-driven liquidity withdrawal and the challenging economic landscape make macro conditions the dominant force over any single chart pattern, Greenspan stated. Fernandez concluded with a strategic focus. To better anticipate Bitcoin's forthcoming movements, we will monitor developments around Greenland, the Federal Reserve's policies, and United States interest rates. Looking further ahead, data from decentralized trading venues suggests a 30% likelihood of Bitcoin descending below $80,000 by June. Similar sentiments prevail on Deribit, the preeminent centralized options exchange. We at BlockSonic understand that the intricate interplay of economic forces significantly shapes the path of Bitcoin. Do you believe macroeconomic factors will continue to dictate Bitcoin's future movements? Share your insights and engage with us in the chat. If you believe in what we're doing and want to support BlockSonic's growth, just scan the QR code on the screen or copy the link in the video description. Every contribution makes a difference and helps us keep delivering quality, independent, and up-to-date content for you. Bitcoin tumbles amidst global tensions, a crypto chronicle. Bitcoin plummets amidst escalating global trade tensions, mirroring movements in traditional financial markets and sending ripples through the crypto landscape. Bitcoin, valued at $91,161.69, alongside the broader crypto market, faced a downturn. The price reversed all gains from last week's surge to $98,000. The selling wave was predominantly driven by the Asian session, with prices beginning to decline at 1:15 Coordinated Universal Time, stabilizing around 7 o'clock Coordinated Universal Time. Privacy coins like Monero, priced at $552.45, along with Dash at $71.37, saw declines of 9% and 3%, respectively. As the initial excitement of the year waned, this Tuesday's crypto sell-off mirrors the movement in United States equity index futures. Futures tied to the Nasdaq 100 dropped more than 1.9% since the derivatives markets opened Sunday evening, while Standard & Poor's 500 futures decreased by 1.6%. The negative price trajectory is linked to ongoing uncertainties that pervaded Monday's market environment, with the European Union and the United States threatening each other with tariffs over unresolved issues regarding Greenland. Meanwhile, haven assets extended their rallies, with gold and silver reaching record highs. We at BlockSonic understand that the intertwining of geopolitical tensions and crypto market movements creates a complex yet fascinating landscape. The blockchain's rhythm echoes these shifts, reminding us of the interconnectedness of global events and digital currencies. How do these global tensions make you feel about the stability and future of cryptocurrencies? Share your thoughts and join the conversation in the chat. Cryptocurrency markets wobble amid rising global trade tensions. Crypto assets tumble as global trade pressures mount on Bitcoin. In the wake of rising tensions between major global economies, we observe a significant impact on cryptocurrency markets. The fluctuating landscape is marked by uncertainty in tariffs and the global bond yields ascent. As we at BlockSonic perceive, the United States Technology Index futures face downward pressure as markets open. This is largely driven by concerns over proposed tariffs between the United States and a coalition of European nations, compounded by geopolitical tensions. Our narrative unfolds around this complex web of economic interplay. The Invesco QQQ Trust Series, which mirrors the tech-centric Nasdaq 100 index, experiences a 2% decline in pre-market trading. This follows the Martin Luther King Jr. Day closure, adding layers of anticipation and caution to the market's rhythm. The narrative of tariffs deepens as we interpret President Donald Trump's intent to levy a 10% tariff on Denmark and other European countries. In response, these nations seem poised to counter with taxes on United States imports. Prediction markets reflect a mere 20% chance of Trump acquiring Greenland before the year 2027, painting a picture of geopolitical complexity. Bitcoin, the digital gold of our era, has descended to $90,000, marking an 8% drop from Thursday's pinnacle. This downturn reverberates across crypto equities. Strategy, identified by its ticker MR, drops by 6% to $164. Galaxy Digital, symbolized by GXE, declines by 8% to $32. Iron, noted as Iron, also falls by 8% to $53. Coinbase and Circle Internet each experience a 5% decrease amidst a broader tech sector decline. The Magnificent Seven stocks, giants in their domain, record 1 to 3% reductions, aligning with the broader trend. Gold and silver, traditional sanctuaries in volatile times, ascend. Gold trades above $4,700 per ounce, boasting a 9% year-to-date increase. Silver surpasses $95 per ounce, soaring 32% within the same period. United States Treasury yields, like a tide, rise while Japanese long-dated bonds face significant stress. Yields on Japan's 30-year government bonds approach 4%, highlighting global bond market tensions. The DXY index, a barometer of the dollar's strength against other major currencies, falls by 0.5% to 98.5. We at BlockSonic understand that the intertwining of geopolitical events and financial markets creates a dynamic narrative, one that echoes through the corridors of cryptocurrencies and beyond. How do you the audience perceive the pulse of these financial tides? Share your insights and join the conversation in the chat. And don't forget to subscribe to the channel, like, share with your friends, and participate in the chat. The image in this live stream is a real-time game. We're implementing new features where you can interact with the game using commands via chat. Join us! These simple actions really help the project grow and keep BlockSonic running at full speed every day. Bitcoin crypto assets face global financial crunch with rising borrowing costs. The climb in the 10-year United States Treasury yield to 4.27% signals turbulent times for cryptocurrencies and global markets. A surge in long-term borrowing costs worldwide is creating ripples across financial markets, with potential impacts on high-risk assets like Bitcoin and cryptocurrencies. The 10-year United States Treasury yield, a critical indicator of borrowing costs, has reached 4.27%, the highest level since September 3rd. This rate influences global finance, setting the baseline for interest rates worldwide. Major economies like China and Japan hold substantial amounts of these bonds, meaning fluctuations in treasury yields can cause shifts from Wall Street to Shanghai. Banks adjust their rates for various loans, including corporate and mortgage loans, above this 10-year yield to reflect the additional risk of lending to non-government entities. As the 10-year yield rises, it leads to increased rates across the financial spectrum, potentially tightening investments and reducing capital flow. This phenomenon, known as financial tightening, poses challenges for investors, particularly in high-risk arenas like cryptocurrencies and stocks. Bitcoin has already felt the strain, dropping over 1.5% to $91,000 since early Asian trading hours. Similarly, futures linked to the technology-driven Nasdaq index have fallen over 1.6%. What fueled this change? It appears linked to President Donald Trump's tariff threats against Europe, connected to his controversial Greenland acquisition attempt, sparking fears of retaliatory bond sales by European investors. Since bond prices and yields have an inverse relationship, such sales could further elevate yields. During the weekend, Trump proposed a 10% tariff on imports from 8 European nations starting February 1st. Potentially increasing to 25% by June 1st, without a Greenland agreement. European leaders criticized Trump's remarks, debating potential retaliation strategies. Speculation suggests Europe could leverage its $12.6 trillion in United States assets, including treasury bonds and stocks. Although analysts note the complexity since most assets are privately held, rather than government-owned. Additionally, yield increases are not confined to the United States alone. Japan's government bond yields are also climbing, partly due to Prime Minister Sani Takaichi's proposal to reduce food taxes. As advanced economies adjust for higher fiscal spending and increased bond issuance, bond yields continue their upward trend. We at BlockSonic understand the global financial landscape's impact on cryptocurrency markets, interpreting these shifts and their potential reverberations. Will the rising tide of bond yields continue to pressure Bitcoin and its digital peers, or is this a temporary storm? We invite you to share your thoughts and join the conversation in the chat. Bitcoin's dive. A 30% downturn looms by late June. Cryptocurrency insights. Bitcoin's rollercoaster and the June tipping point. As we observe the blockchain's pulse, Bitcoin, with a value of $90,937.21, finds itself dipping below $91,000 amidst economic turbulence. Data from decentralized trading platforms suggests potential deeper price declines in the coming months. Within the realm of Derived.xyz, a decentralized protocol for on-chain options and structured products, traders perceive a 30% likelihood of Bitcoin sinking below $80,000 by the close of June. A similar sentiment echoes on Deribit, the prominent centralized options exchange. Sean Dawson, the protocol's head of research, shared with CoinDesk, options markets reveal a distinct downside bias, showing a 30% chance Bitcoin drops below $80,000 by June 26, contrasted with a 19% chance of a rise above $120,000 in the same time frame. Options as derivative contracts allow speculation on Bitcoin's price trajectory, much like a side bet at a sports event. The process involves paying a nominal fee to secure a what-if scenario. If Bitcoin surges past a preset price point, profits are made by purchasing inexpensively. This forms a call option. Conversely, if it plunges below a predetermined threshold, gains are secured by selling at a premium. This forms a put option. In both situations, potential losses include the entry fee and premium if the market fails to move as anticipated. This collective price forecasting highlights a 30% chance of Bitcoin descending below $80,000. Such a downturn would mark the lowest price point since April 2025, when Bitcoin plummeted to $75,000, coinciding with sweeping tariffs on imports, shaking global markets. Current geopolitical tensions, particularly involving proposed tariffs and international disputes, may deepen losses, as noted by Dawson. Escalating geopolitical tensions between the US and Europe, especially concerning Greenland, elevate the risk of a shift back into a volatile market environment. A dynamic not yet mirrored in spot prices, he remarked. He further explained that the options skew, indicating the price difference between call and put options, remains negative, suggesting short-term downside concerns. Both Derive and Deribit show significant open interest in put options at strike prices between $75,000 to $80,000, reflecting expectations of a decline into the mid-$70,000 range. We at BlockSonic understand that these signals are crucial in navigating the ever-shifting landscape of cryptocurrency. How will these potential shifts in Bitcoin's value influence your strategy in the decentralized realm? We invite you to share your thoughts and engage in the conversation with us in the chat. And don't forget to subscribe to the channel, share with your friends, and participate in the chat. The image in this live stream is a real-time game. We're implementing new features where you can interact with the game using commands via chat. Join us! These simple actions really help the project grow and keep BlockSonic running at full speed every day. Bitcoin's rollercoaster, dipping below the $91,000 mark amid altcoin struggles. As Bitcoin and the world of cryptocurrencies navigate turbulent times, altcoins find themselves on shaky ground, illustrating the volatile dance of digital assets. We find ourselves amidst a landscape where Bitcoin and key tokens are nursing their wounds during the Asian afternoon hours of Tuesday. This comes after Monday's macroeconomic tremors, but derivatives traders remain cautious, adopting defensive positions as we approach mid-year. In the early European hours, Bitcoin fell beneath the $90,000 mark, exhibiting little change from the previous day, which saw a slump linked to new tariff reports and a broader retreat from risk, driving investors towards safer harbors. Ethereum steadied near $3,200, while Solana, XRP, and Cardano wavered, still grappling with significant weekly losses. This underscores the heavier blow that altcoins have suffered since last week's zenith. Macro level, uncertainties continue to cast a long shadow. Fresh tariff disputes between the United States and Europe, influenced by comments from President Donald Trump regarding Greenland, are steering investors back to conventional safe haven. Gold and silver have surged, leaving cryptocurrencies trailing even as some stock markets remain stable. Farzam Ezani, the chief executive officer of Exchange Valor, observes that digital assets are exhibiting a unique crypto-specific fragility, rather than a widespread risk-off sentiment. Capital flows are favoring traditional safe havens, while crypto persists in trading as a high beta risk asset, he noted, indicating that Bitcoin may struggle to maintain its elevated levels without clearer signals of rate cuts or new institutional investments. Yields on United States Treasury bonds have also risen as global bond markets experience sell-offs driven by fiscal and geopolitical worries, adding further pressure on risk assets. At present, traders seem content to maintain a defensive stance, waiting for a decisive catalyst to lift the market from its current state of low volatility. We at BlockSonic perceive this situation as a reflection of the intricate balance between risk and stability within the crypto realm. Are we witnessing a temporary glitch or a sign of deeper shifts in digital asset dynamics? We invite you to share your thoughts and engage in this conversation within the chat. Dormant Bitcoin fortune awakens after 12 years. Astonishing crypto movement. Long silent Bitcoin wallet shifts millions. Visualize uncovering an old cryptic treasure map that now reveals a hidden fortune worth $84 million. Naturally, one would be eager to secure such a bounty. In a similar rhythm, a profound on-chain maneuver by a Bitcoin entity with a value of $90,937 per Bitcoin occurred following more than 12 years of blockchain silence. This movement sends waves of curiosity across the crypto space. As the week began to close, an address tagged as a 2HQPZGG transferred 9 Bitcoin, translating to over $84 million, to a new address, BC1 QKSXI. As documented by blockchain investigators Will, Alert, and Lookin Chain. This vintage wallet originally amassed Bitcoin in 2013 when the digital currency's value was under $7, resulting in a potential gain surpassing 13,000%. The recent activity of this old whale aligns with a trend noticed after Bitcoin surged beyond $100,000 last year, reviving dormant addresses brimming with vast unrealized profits. These reawakenings ignite discussions across social channels about possible profit-taking actions that could potentially exert downward pressure on Bitcoin's market value. However, it is important to note that none of the whale's coins transferred on Monday have been deposited into exchanges yet. Therefore, this shift to a new address might signify a consolidation or security strategy, rather than an imminent sale. Bitcoin recently traded close to $92,000. We at BlockSonic perceive that the movements of such dormant Bitcoin significantly impact the crypto landscape, sparking both intrigue and speculation. What does this awakening signal to the crypto community? Share your thoughts and join the conversation in the chat. And don't forget to subscribe to the channel, like, share with your friends, and participate in the chat. The image in this live stream is a real-time game. We're implementing new features where you can interact with the game using commands via chat. Join us. These simple actions really help the project grow and keep BlockSonic running at full speed every day. Bitcoin climbs as tensions ripple through crypto watercourses. Prepare for crypto waves as Bitcoin surges amidst global trade tensions, warns an industry leader. Bitcoin's price found stability above $93,000 during the United States session on Monday. This occurred after an overnight decline saw the asset dip to $91,800. The recent drop was triggered by United States President Donald Trump's renewed trade threats, which included potential new tariffs on Denmark and other European nations, spurred by disputes over Greenland. In a trading environment marked by low liquidity due to a United States holiday, Bitcoin recouped some losses, but remained down by 2% on the day. Ethereum's Ether experienced a decrease of 3.7%, maintaining a position just above $3,200. Altcoins suffered more significant losses, with Solana, Dogecoin, Cardano, Chainlink, and Avalanche falling between 5 and 6%, and SU plummeting by more than 10%. At the same time, gold reached a new pinnacle at nearly $4,700 per ounce, enhancing its appeal as a sanctuary amid geopolitical unrest. Over the past 12 months, the precious metal has surged by more than 70%. Matt Howells, Barbie, vice president at Chronicle, observed that the overnight decline underscored a broader trend of relative fragility within the crypto markets. Since the crash on October 10th, crypto has persistently demonstrated a symmetric downside risk, with markets tending to penalize negative news more harshly than they reward positive developments, he stated. As the week began, Bitcoin was situated near crucial levels for potential gains, but geopolitical headlines swiftly disrupted the momentum, he remarked. Nonetheless, he expressed that the relatively moderate scale of the decline, approximately 3.5%, indicates that traders might be speculating on the possibility of Trump retracting the tariff threats. This scenario, humorously dubbed Trump always chickens out, mirrors last year's pattern, with United States threats against China and other nations. Regardless of the outcome of the tariff war threats, as political and business leaders convene in Davos for the World Economic Forum, the coming days are likely to generate significant volatility, with crypto markets reacting to any suggestions of escalation or de-escalation in the EU-United States tariff situation, Howells Barbie noted. Meanwhile, analysts at Bitfinex highlighted that the selling pressure from long-term Bitcoin holders has subsided, dropping to roughly 12,800 Bitcoin per week from a peak of over 100,000 Bitcoin during this market cycle. However, Bitfinex cautioned that Bitcoin now encounters considerable resistance from a dense long-term holder supply zone between $93,000 and $110,000, where previous rallies have stalled and might limit prices once more. For a more sustainable rally to develop, market structure needs to transition into a phase where the maturation supply begins to surpass long-term holder spending, they stated. Historically, this configuration was last observed between August 2022 and September 23rd, and again from March 2024 through July 25th. Both periods preceding stronger and more persistent Bitcoin rallies. Such a shift would elevate long-term holder supply, indicating renewed confidence and diminished sell-side pressure, they added. We at BlockSonic understand that in this intricate dance of global trade tensions and crypto market fluctuations, every ripple carries its own weight. How will these currents shape the future of our digital assets? We invite you to share your insights and join the conversation in the chat. Bitcoin and crypto. The epic forces shaping prices in 2026. Unraveling the threads that weave the crypto tapestry. Bitcoin, ETFs, and global dynamics. As we journey through the early days of 2026, Bitcoin has surged beyond last year's nadir, breaking past $80,000 and rallying to trade near $93,300 after briefly touching $97,000. The nearly 7% gain since the start of the year has pulled other crypto assets in its wake, inching Bitcoin closer to levels that have previously capped rallies since November. Analysts from NYDIG Research and Wintermute have identified key drivers behind this ascent. Geopolitical tensions and a shift in capital flow dynamics within the crypto market. These elements are among the three significant catalysts poised to propel prices beyond current thresholds. Before diving into these catalysts, let's explore why cryptos are gaining traction this year, after a lackluster prior period. Greg Cipollaro from NYDIG Research highlights the political instability in the United States as a powerful short-term driver. He notes the ongoing tension involving Donald Trump and his critical stance towards the Federal Reserve and its chair, Jerome Powell, who resisted reducing interest rates despite presidential pressure. Kipolaro draws parallels to historical political interference in U.S. monetary policy, notably recalling Richard Nixon's influence over the Fed before the 1972 election. Political meddling in monetary policy has historically resulted in adverse outcomes, such as increased inflation, diminished central bank credibility, and weaker currencies. Bitcoin, with its non-sovereign nature and fixed supply, may serve as a refuge for investors wary of similar risks today. Kipolaro also emphasizes the broader macroeconomic landscape as a factor stabilizing prices. With the global money supply reaching unprecedented heights, while precious metals like gold, silver, platinum, and palladium have soared, Bitcoin, often dubbed digital gold, seemed left behind. Although our analysis shows gold and Bitcoin react to different macro forces with almost zero correlation, both underscore a broader truth. Globally, truly, non-sovereign stores of value are exceedingly scarce, suggesting Bitcoin may now be catching up. The reduction in overhangs also plays a role. The conclusion of tax loss selling, where investors offload assets at a loss to offset gains from other assets, coincided with the year's turn. Another overhang dissipated following the October 10th liquidations, which left exchanges with unhedged long positions post-auto-deleveraging of traders. As exchanges sold these long positions, prices stayed suppressed. The ongoing discourse regarding Bitcoin's 4-year halving cycle and its potential demise is also noteworthy. A halving event halves the reward for verifying new blocks on the Bitcoin blockchain, occurring every 210,000 blocks, roughly every 4 years, historically triggering boom and bust cycles. Market observers note Bitcoin, and by extension, the broader crypto market, have seemingly adhered to a 4-year cycle, where Bitcoin rallies post-halving, lifting the market, fueling speculative mania, which then descends into a bear market before the next halving. However, according to Wintermute, this cycle might be obsolete. Wintermute's recent note on X declared the 4-year cycle is extinct. The anticipated rally of 2025 did not manifest, but it might signify crypto's shift from speculative fervor to a more established asset class. Historically, crypto-native wealth functioned as a rotating pool. Gains in Bitcoin flowed into Ethereum, then into other blue-chip altcoins, eventually reaching more speculative tokens, a phenomenon known as alt season. However, Wintermute's ODCC flow data indicates this mechanism has faltered, largely due to a structural transformation. The rise of institutional products like exchange-traded funds, ETFs, and digital asset trusts, DATs. Wintermute notes that ETFs and DATs have evolved into walled gardens, providing sustained demand for large-cap assets without naturally rotating capital into the broader market. In 2025, altcoin rallies averaged only 20 days, down from over 60 days in 2024. Major assets absorbed the majority of new capital, while much of the market struggled to maintain momentum. Additionally, retail interest shifted toward equities. With retail focus diverted to stocks, 2025 became a year of extreme concentration, Wintermute observed, with investors gravitating towards artificial intelligence, rare earths, and quantum computing stocks. Wintermute identifies this capital rotation as a primary driver among 3 other significant catalysts for potential price surges this year. Institutional vehicles like ETFs and treasury firms must encompass a wider array of digital assets to catalyze larger price movements. Early signs of this shift are visible, with Spot Sol and XRP ETFs trading in various altcoin-linked ETFs under review. The return of the wealth effect presents another catalyst. A robust Bitcoin or Ethereum rally could generate capital for investors, potentially spilling into the broader altcoin market. Lastly, retail investors rotating back from equities into the crypto space, could usher in new stablecoin inflows and renewed risk appetite. Winter Muta questions how much capital will ultimately return to digital assets. Outcomes hinge on whether these catalysts significantly expand liquidity beyond a few large-cap assets, or if concentration persists. We at BlockSonic understand that the crypto landscape is ever-evolving, shaped by intricate dynamics and transformative forces. As we navigate this complex terrain, we invite you to ponder: how will these catalysts redefine the crypto market's future? Share your thoughts and join the conversation in the chat. And don't forget to subscribe to the channel, share with your friends, and participate in the chat. The image in this live stream is a real-time game. We're implementing new features where you can interact with the game using commands via chat. Join us! These simple actions really help the project grow and keep BlockSonic running at full speed every day. Bitcoin's artistic renaissance. The NFT revival by crypto elite. The remarkable resurgence of NFTs within the crypto community continues, fueled by affluent Bitcoin collectors who seek ownership over liquidation. In a world where the once fervent market for non-fungible tokens, or NFTs, appears to have waned, their valuations now a shadow of the peaks of 2021 and 2022, we witness a notable transformation. France's flagship event for the sector, NFT Paris, faced cancellation just 1 month before its anticipated opening, casting a shadow over the market. Yet, as we at BlockSonic understand, the NFT market is far from lifeless. Yat Siu, co-founder of Animoca Brands, a pioneering Web3 development and venture capital company, assures us that wealthy collectors are sustaining a vibrant NFT marketplace. These investors, much like collectors of traditional art, find connection in this digital realm, reminiscent of how heirs to family fortunes might collect works by renowned artists like Picasso. Do NFTs retain their allure among affluent collectors? Absolutely. As a dedicated collector, I resonate with this community, Siu shared. It mirrors the camaraderie among collectors of Picassos, Ferraris, Lamborghinis, or Rolex watches. This is simply a digital adaptation. While Siu acknowledges that his own NFT portfolio has decreased by approximately 80%, he emphasizes that these acquisitions were never intended for quick profit. These are enduring assets that hold significance, Siu explained. NFTs, a unique class of digital tokens, first emerged on the Ethereum blockchain in late 2017 with the rise of collectible CryptoKitties. Like other crypto trends, NFTs have experienced waves of popularity, peaking in 2021 and 2022, with monthly sales surpassing $1 billion. Currently, Siu highlights monthly NFT sales approaching $300 million, predominantly driven by affluent digital art enthusiasts. For example, billionaire Adam Weitzman has been actively acquiring NFTs like Other Deed Lands, representing land deeds in Otherside, a three-dimensional blockchain-based virtual world by Yuga Labs and Bored Apes. Recall that 5 years ago, this was a $0 market, Siu remarked. It all depends on the perspective you choose. The beauty here is that all data is transparently available on the blockchain. Regarding the cancellation of the NFT Paris event, Siu clarifies that it does not reflect negatively on NFTs or the well-organized conference. I believe it reflects more on France's shifting stance, once pro-crypto, now distancing itself. In Europe, we observe similar anti-crypto sentiments. Security concerns in Paris also played a crucial role, according to Siu Gadao. In the past year, multiple attempts at kidnapping and abduction of crypto executives and investors have surfaced. The NFT Paris faced challenges, not only due to sponsorship issues, but also because many, including myself, have been hesitant to visit Paris due to security concerns. Siu quoted. As we at BlockSonic perceive these dynamics, we ask, how do you envision the future of NFTs within the crypto cosmos? Share your thoughts and join the conversation in the chat. Crypto traders lightning win from $285 to $627,000 in a day. A wallet connected to the pump fund memecoin skyrocketed $285 into a fortune, raising questions about insider trading in crypto's volatile memecoin market. A trader who initially exchanged $285 for a memecoin named Israel managed to secure $627,000 after selling the token to a surge of buyers. Through blockchain analysis, Chain suggests this trader was an insider, acquiring 66.3 million Israel tokens, selling nearly 10 million for $210,000. Leaving an unrealized profit of $417,000 on the table. On-chain evidence supports these claims, with the wallets involved executing hundreds of market sell orders over a 10-hour span on that Monday. Commonly referred to as snipers, memecoin insiders often receive information about a project before it launches. This inside knowledge allows them to enter early using bots, selling on exchanges as prices climb for swift gains. The concept of sniping gained mainstream attention in early 2025 when Hayden Davis disclosed his involvement in issuing notable meme coins like Melania and Libra during a podcast with Kafasilla. Davis's revelations painted meme coins as tools for draining liquidity from unsuspecting buyers, casting him as both an antagonist and a representative of the meme coin age. His confessions highlighted the chaotic realm of meme coin trading, where figures like Davis exploited uninformed traders. Although the hype around meme coins from early last year has largely dwindled, a slight resurgence appears to be underway. The Israel transaction aligns with the mini meme coin season shown by the record daily trading volume on the popular meme coin launch platform Pump Fund, which hit $1.2 billion earlier this month. Israel token has garnered a following of over 7,000 members on X since its debut last Sunday, with 24-hour trading volume reaching $18 million. A report from Solidus Labs in May of last year alleged that 98% of tokens issued on Pump Fund were fraudulent, an accusation the platform strongly denied, with a spokesperson asserting, "Solidus Labs lacks a basic understanding of meme coins." We at BlockSonic interpret that this scenario encapsulates the high-stakes world of meme coins, highlighting both the potential for rapid gains and the risks of insider manipulation. The resurgence of memecoin interest suggests a persistent allure despite past controversies. As we at BlockSonic perceive these dynamics, we ponder, how do we navigate the balance between innovation and integrity in the crypto space? Share your insights and join the conversation in the chat. Bitcoin's 60-day cycle. A crypto rally in sight. The Bitcoin price is poised near a significant 60-day mark, hinting at a potential surge in the crypto world. Our collective consciousness has observed that Bitcoin has persistently hovered between its November low of approximately $80,000 and its January high of around $98,000 for 59 days. This period aligns with the notable 60-day consolidation phases seen since the crypto exchange FTTX's collapse marked a cycle bottom in 2022. Consider the scenario in April 2025 amidst the market upheaval linked to tariff policies. Bitcoin found a base near $76,000, maintaining a range up to $85,000 for 52 days before a breakout ensued. Previously, from December 2023 to mid-February 2024, Bitcoin oscillated just below $40,000 to about $50,000 over 57 days. Coinciding with the introduction of United States spot Bitcoin exchange-traded funds. This phase concluded with a surge to new highs come March 2024. A similar pattern emerged between August and October 2023, where Bitcoin traded in a band of $25,000 to $30,000 for 59 days, followed by an upward trend. Following the collapse of FTX, which marked the prior cycle's nadir, Bitcoin consolidated around $15,000 for approximately 62 days. This phase culminated in a breakout in January 2023, heralding the onset of a new market cycle. Digital asset research underscores this 60-day resolution, indicating that Bitcoin's post-bottom consolidations typically manifest within a 60-day timeframe, suggesting that the price coil is no longer merely constricting but beginning to release. We at BlockSonic understand that these patterns illustrate the rhythmic pulse of Bitcoin cycles. As we approach another potential breakout, we at BlockSonic perceive the imminent possibilities for the crypto market. What insights do you draw from Bitcoin's rhythmic cycle? Share your thoughts and join the conversation in the chat. Crypto revolution. NYSE's blockchain leap for non-stop trading. The New York Stock Exchange embraces blockchain to allow seamless Bitcoin and crypto trading, all day, every day, pending regulatory approval. We at BlockSonic are witnessing a transformative leap as the New York Stock Exchange reveals plans to introduce an always-open blockchain-based platform for tokenized stocks and exchange-traded funds trading, set to launch later this year. The New York Stock Exchange executives highlight their plan to leverage their cutting-edge technology alongside private blockchain networks to facilitate real-time trading of tokenized securities. This innovative platform will support 24/7 operations, instant transaction settlement, dollar-denominated order sizes, and stablecoin funding, promising a seamless trading experience. Michael Blaugrund, the Vice President of Strategic Initiatives at the Intercontinental Exchange, Incorporated, which owns the New York Stock Exchange, emphasizes that supporting tokenized securities is crucial for their strategy to create on-chain market infrastructure for trading, settlement, custody, and capital formation in the new landscape of global finance. The new platform is set to empower a New York Stock Exchange venue, facilitating tokenized shares interchangeable with traditional securities and tokens issued as digital securities. Tokenized shareholders will retain traditional dividends and governance rights, ensuring compatibility with established market principles. Access will be available to all qualified broker-dealers without discrimination. The company is currently seeking regulatory approval for the 24/7 trading platform, with hopes to launch by the end of the year. The New York Stock Exchange's tokenized securities platform is part of the Intercontinental Exchange's broader digital strategy. This includes readying their clearing infrastructure for continuous trading and exploring the integration of tokenized collateral. Intercontinental Exchange is collaborating with banks like BNI and Citi to support tokenized deposits within their clearinghouses, enabling clearing members to manage funds outside conventional banking hours, meet margin requirements, and handle funding across various jurisdictions and time zones. Nasdaq, the New York Stock Exchange's main competitor in the United States, announced plans in December to near round-the-clock trading for stocks and exchange-traded products. Reflecting the global evolution of financial markets and investor behavior, we at BlockSonic perceive that the integration of blockchain technology into traditional trading platforms could redefine the financial landscape. How will this continuous trading shift the dynamics of financial markets and crypto assets? Engage with us in the chat and share your insights. Bitcoin and crypto funds surge before market shifts. Crypto investment swells. Bitcoin, Ethereum, Solana see big gains before turning tide. In the ever-pulsing world of digital assets, we observed a significant surge as investment products attracted $2.7 billion in net inflows last week, marking the most robust weekly performance since October 2025. This influx was driven by fresh allocations to Bitcoin and a broad spectrum of major tokens, though this momentum met with a shift in sentiment by week's end. Bitcoin was at the forefront, gathering $1.550 billion in inflows, as outlined in a CoinShares report released on Monday. Meanwhile, Ethereum welcomed $496 million, and Solana saw an addition of $45.5 million, highlighting that investor interest extended beyond Bitcoin. Even as conversations around stablecoins and yield persisted, however, the week did not maintain a singular direction. By Friday, flows reversed sharply, with products experiencing outflows totaling $378 million. This reversal was fueled by resurfacing geopolitical tensions and tariff threats, including renewed conflicts linked to Greenland. CoinShares head of research James Butterfill also cited policy uncertainties following reports that Kevin Hassett, a potential candidate for the next United States Federal Reserve Chair, was likely to continue in his current role. Well, regionally, the United States led with inflows amounting to $2.05 billion. Other countries such as Germany, Switzerland, Canada, and the Netherlands recorded positive flows of $63.9 million, $41.6 million, $12.3 million, and $6 million, respectively. Altcoins made smaller yet noteworthy strides, with XRP leading at $69.5 million. Zui, Lido, and Hedera also experienced modest increases. Beyond token funds, blockchain equities drew $72.6 million, indicating that investors are still keen to gain crypto exposure through public market proxies, despite the return of headline risks. We at BlockSonic understand that these movements in the crypto landscape reflect broader market dynamics and investor sentiment shifts. We at BlockSonic perceive that as the digital asset space continues to evolve, so too does the complexity of its interactions with global events and policy changes. How do these fluctuations in the crypto market influence your perspective on digital assets and their future role in the financial ecosystem? We invite you to share your thoughts and join the conversation in the chat. Bitcoin's battle, humans, not code, pose the greatest threat. Cryptocurrency's security shift, human errors, eclipse code flaws. As we delve into the evolving world of cryptocurrency, a paradox emerges. While crypto assets face rising losses, the security of on-chain systems is advancing. The year 2025 marked a record for hacks, yet these incidents stemmed not from flawed smart contracts, but from human errors and manipulation. The failures of 2025 were rooted in the vulnerabilities of human operations. Compromised passwords, insecure keys, and manipulated employees played a significant role. Mitchell Amador, Chief Executive Officer of the on-chain security platform Immunify, underscored this point in a recent discussion with CoinDesk, stating that the underlying on-chain code is actually improving, even as financial losses increase. Amador's insights highlight a shift towards more sophisticated criminal tactics rather than weaker systems. His perspective echoes the findings of Chainalysis's 2026 crypto crime report, which notes a surge in scams targeting individuals over infrastructure. In 2025, approximately $17 billion were lost to scams, with impersonation and social engineering growing exponentially, aided by artificial intelligence. A prominent example is the recent case unveiled by blockchain researcher ZachXBT, where a hacker used social engineering to steal 2.05 million Litecoin and 1,459 Bitcoin, swiftly exchanged for Monero through instant exchanges. Amador emphasized that as the code becomes less exploitable, the focus of attacks is shifting towards human weaknesses, which must be prioritized by on-chain security experts. Despite advancements, Amador cautioned against complacency, revealing that over 90% of projects still harbor critical vulnerabilities. With less than 1% utilizing firewalls and fewer than 10% employing AI detection tools, there remains much work to be done. The year 2026 will see artificial intelligence alter the landscape of security, empowering both defenders and attackers with machine speed capabilities. Amador's warning extends beyond smart contracts, pointing to the potential risks as crypto systems begin making autonomous decisions. The emergence of on-chain AI agents presents new vulnerabilities, particularly if their control layers are compromised. As we navigate this evolving landscape, the challenge of securing these agents will become increasingly significant. We at BlockSonic understand that the intersection of advancing code and human vulnerability will define the future of crypto security. As the battle shifts from on-chain to user interfaces and education, we must ask ourselves, how can we fortify the human link in this chain of security? We invite you to share your thoughts and join the conversation in our chat. Thank you so much for following BlockSonic today. See you in the next live session with more news, analysis, and market alerts. Don't forget to follow our channel and turn on notifications. See you soon. Keep an eye on Bitcoin and continue listening to the sound of the blockchain.